Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 9th of January 2021 and we're publishing our Gold and Silver Weekly Update for the weekend in the 8th of January. We also briefly look at political events and economic reports, which could shape what happens to the US dollar and therefore precious metal prices. And we also look at what happened yesterday, which proved to be somewhat of a surprise. So let's take a look. Yes, indeed. Yesterday, for most of us, was a surprise, as we saw both gold and silver pricings being hammered. And we produced a video on this very subject yesterday entitled Why Gold and Silver Took a Hammering Today, where we highlighted what exactly had happened. We also produced episode 5 of our Bitcoin versus Gold and Silver series, as Bitcoin hit yet another all-time high, exceeding $41,000. We discussed in that video the intrinsic value of gold and silver versus Bitcoin, and we have place links to both of these videos below. Okay. Back to this past week's economic performance. Gold fell $50 last week, from $1,900 to $1,850, having hit a high of $1,959 and a low of $1,831, a fall of 2.6% for the week. In sterling terms, gold finished the week at £1,364. That's down £24. And in euros it closed at €1,513. That's down €50. Silver fell 97 cents, from $26.42 to $25.45. Having hit a high, though, of $27.95, not quite reaching that $28 level, and a low of $24.57, so a fall of 3.7%. In sterling terms, silver closed at £18.76, that's down 60 pence, and in euros it closed at 20.81 euros, that's down 0.95 euros, or almost short of €1. The gold to silver ratio rose from 71.9 to 1 to 72.7 to 1. Bitcoin, as mentioned earlier, exploded again last week, and it was up $11,293 at $41,098, though it has been higher. The Dow Jones closed on Friday at 31,097, up 56 points on the day and up 491 points on the week. The S&P 500 closed at 3,824, up 20 points on the day and up 68 points on the week. And the Nasdaq Composite closed at 13,201, up 134 points on the day and up 313 points on the week. Brent crude closed at $55.99, up $4.19, and WTI crude closed at $52.24, and that's up $3.72 on the week. The dollar index stands at 90.09, and that's up 0.16 on the week. So most of us precious metal holders must be feeling we've been victimized, as everything else seems to have gone up. Now, our conclusion price trading range last week stated, quote, "We can see gold trading normally between $1,850 and $1,950, with $1,800 and $2,000 being outliers, and silver trading between $26 and $28, with $25 and $29 being outliers." Now, we were just marginally out on the lower outlier for silver for a couple of hours when silver dropped, albeit briefly, as we say, below $25. But we were particularly pleased with our comment last week, which stated, quote, "We believe there will be a follow-through higher, and it is quite possible that 1950 may indeed be tested. That said, if prices were to fall, there's strong support at 1850 and very strong support at 1800, unquote. Particularly pleased because quite a few of our supporters actually questioned that evaluation, being confident that prices were going to fall on Monday. In fact, gold opened up strongly, rising over $40 in a few hours. The correction then came on Wednesday, really, and then a significant dip on Friday, with a slight attempt of recovery in the last 3 hours of trading. Now, as already mentioned, we highlighted the main reason for yesterday's fall in prices in the video that we produced yesterday, though they have recovered a little from their worst depths. Technically, there is support at $1,850 for gold, then again just below the $1,800 level where the 50-week EMA sits, and just above the $1,800 level where the 200-day EMA rests, and with 1,800 itself being an important psychological round number. So we should not be surprised if prices continue to dance around that sort of figure. The rise in Treasury yields on Friday certainly made investors question their non-interest-bearing gold investments, and we shall see shortly as to how much of a real concern that is to them. This coming week is going to be interesting, as they shall reveal to us the true sentiment of gold-holding investors and professional investors and money managers. Not the likes of us, but the professionals in the field will give us a good indication as to whether they're going to stick with gold short term or they're going to release some of their monies back into higher risk assets such as equity markets. Or even, goodness forbid, cryptocurrencies, especially Bitcoin. The main trend for gold is still up. But should gold fall below 1820, this then turns into a potential downtrend, and a rise above the 1960 level will signal a continuance of the uptrend. Now, one analyst forecasted yesterday, quote, "The short-term range is $2,099 to $1,767. Its retracement zone at 1,933 to 1,972 is resistance. This area stopped the rally at $1,962 on January the 6th. Minor resistance is at a 50% level at 1,891. Unquote. Now, whilst acknowledging that the major long-term support is 1780 to 1705, a figure he sees gold potentially falling to this coming week. If he's right and we do get close to 1700, please remember that's our predictive low for gold for 2021 and should then be seriously worth considering buying, at least in our opinion. What was also quite interesting was the fact that gold and silver fell so abruptly after truly disappointing non-farm payroll data announced yesterday, which ordinarily would lend support to the argument that more stimulus will be on the way and therefore act as a potential tailwind for gold. The Labour Department reported that the non-farm payrolls fell by 140,000. That was below expectations of a 50,000 increase, and compared with a rise in November of 336,000 jobs, reveals an adverse swing of 476,000. It was the first monthly drop since April. The unemployment rate was unchanged at 6.7% compared to a 6.8% estimate. Silver fared no better and was looking as if it would hit $28 on Wednesday. This rise in US rates, or if you like bond yields, certainly deflated that potential on Friday. So clearly the resistance level for next week will be seen at the main round points of $26 and $27, with a week's high of $27.95, really appearing out of sight for the moment at least. On the downside though, again $25.24 should provide strong support, further enhanced at the $23.61 level, which was achieved on the 9th of December. As we stated yesterday, should our low for the year be proven wrong and silver heads towards $22 or even lower, it will provide an excellent accumulation opportunity, as frankly we can only see positive momentum for silver once people eventually get back to work and the economy starts to rise again. Now, looking ahead to this coming week's economic data, which could have an impact on both the dollar and precious metal prices, on Monday there's nothing scheduled, but on Tuesday we have the NFIB Small Business Index for December and job openings for November. Now on Wednesday we have the Consumer Price Index for December, plus core CPI and the federal budgets for December and the Beige Book. Thursday, of course, weekly jobless claims, plus the import price index for December. Quite a lot of announcements on Friday, including retail sales, producer price index, industrial production, and capacity utilization, all for December, and the preliminary consumer sentiment index for January. What is it about Fridays where most of the important data usually seems to be announced? And this coming week will be no change, though we shall be paying some attention to the weekly jobs report, which again could and probably will show a further deterioration. Now next week will certainly be one consisting of political intrigue, with the Democrats now determined to impeach President Trump for a second time, as the 25th Amendment approach is unlikely to be invoked, as so many of Trump's cabinet have already resigned or may very well resign, in order partially to avoid being involved in such an act. Now, whilst this impeachment, if it does happen, will pass in the House of Representatives, it's unlikely to gain the supermajority required in the Senate. But disallowing Trump to stand a second time could be carried with a simple majority, and one in which the Democrats could win when Kamala Harris takes her seat as President of the Senate and acts as the deciding vote. But this can only happen after the 20th of January. But do not be surprised if it does happen, as that certainly seems to be their intent. So what is likely to happen this coming week for gold and silver prices? Well, frankly, it's tricky because of what happened on Friday. We suspect gold and silver may be under some further pressure, but at the same time, we can also see traders somewhat uncertain. And so this week may prove an interesting one, in that we are likely to see quite a few oscillations. Sticking our necks out a little here, we can see gold trading normally between 1800 and up to 1950, with 1750 at the low end and 2000 at the upper end being outliers. And silver primarily trading between $25 and $27, with 24 and 28 being outliers. Now tomorrow we shall be publishing episode 6 of Bitcoin vs. Gold and Silver, where again we reveal a number of new advocates to this rather speculative, but for the moment exciting investment, or gamble. Meanwhile, please do share your thoughts on this week's update, and also what you think could happen to Bitcoin over the coming weeks. Will it continue to have an ever-increasing rise? And meanwhile, we thank you so much for listening. If you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they are published. And finally, as always, we wish you a safe, enjoyable weekend and prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.